To the rest of the news from the local share market now, and earlier I spoke to Marcus Padley from Patersons Securities. Marcus Padley, the New Zealand earthquake, I mean, clearly a horrendous tragedy, but presumably it's also had an impact on share markets.
Yes, it has, Ticky. The insurance companies and the banks both did terribly today, but it's hard to determine whether that was so much the earthquake as the market itself, because it's been a pretty poor day. And on the insurance front, I think what it does confirm to reinsurance companies, and cost of reinsurance is one of the biggest costs for the insurance companies. It does make all those Lloyd's underwriters fearful of Australia. And those reinsurance costs are going to go up. But I think that's already been sort of factored in after recent cyclones, etc. This just adds to it. So obviously not good for insurers, but it's difficult to see what direct impact there is. This doesn't seem quite as bad as some of the other incidents recently.
Pretty downcast day across Asia generally. Japan still has had its credit rating downgraded by Moody's.
Yes, Moody's have downgraded their outlook to negative. Some of the banks in Japan fell on the back of that, but other commentators are suggesting it's not really a big impact for Japan. It's also no great surprise either. And if you consider Japan's 1.7% drop today, that is less than the Chinese fall of 2.3% and the Hong Kong fall of 1.9%. So I don't think that was having a big impact, but it is just confirming that Japan is a long way from recovering its 20-year malaise. Their stock market's down almost 80% in 20 years now. Talked to a Japanese investor about annual compound returns. I think it's something like minus 7% per year. There's no going up forever in the equity markets over there.
Now, as we've reported, BHP Billiton have given details around its share buyback. A good deal for shareholders?
Look, outwardly it is, because the share price of BHP went up today. I would point out if BHP hadn't gone up today, the market would be another 15 points down. But I would just point out for shareholders that the Woolworths experience, they had a $700 million share buyback announced on August 26th last year. And when you tendered your shares in, the eventual result was that there was a scale back of 88.2%, which meant that only 11 of your 100 shares actually got bought back in the Woolworths buyback. And I think you have to be realistic. The BHP buyback, with only a 28-cent capital component, is going to be extremely popular, and you are going to see probably a very low level of shares bought back. So people buying the stock for the buyback, which you have to do by Thursday night, people buying for the buyback have to be realistic. They're not probably going to get a lot of shares bought back in the end. And you also have to consider, depending on your tax rate, it just may not be worth buying for the buyback. For zero taxpayers, it's a lot more beneficial. But I think if you're buying BHP now, you're buying it because you think BHP will go up. And that would happen because of the message they're passing, which is the era of mega acquisitions is possibly over, and they're going to start paying the money back to shareholders, and that should be very well received by institutions.
And online recruitment firm Seek has achieved a record half-year profit, but its share price has slumped 12%. Please explain.
Well, they've made about $48 million, and the market was looking for over $52 million, and the employment division is particularly below expectations. And I think people are feeling that some of these online businesses are beginning to mature a little bit. They all had phenomenal share price rises over the last couple of years on the sort of unquantifiable growth factor. But we've seen stocks like What If. They are now down 44% from the high last year. We've now seen Seek down about 28%, Melbourne IT down 20%. You could name a lot of these online businesses. I think realestate.com is the only one that's right at its highs at the moment. But there are a lot of online businesses that appear to be peaking sentiment-wise in the stock market. A weak set of results compared to expectations obviously doesn't help.
Marcus Padley, thanks for talking to Lateline Business.
My pleasure, Ticky.